Hey everyone, my name is Jack. Welcome back to my M1 Finance portfolio series, where I am trying to build a $100,000 portfolio in this platform, M1 Finance. I'll include a detailed review to this platform on the screen right now, but basically I'm taking a few different stock investing strategies and compiling them into one portfolio. Now, this series was specifically inspired by the Joseph Carlson series, so I've actually included a slightly modified version of his portfolio in this portfolio. So that's something that you can do with M1 Finance is you can actually copy people's portfolios and then import it into this platform, and you can actually adjust it or just copy their portfolio. M1 Finance calls them pies. You can copy their pies as you like them and add them to your own. So I always include a link to this whole portfolio or this pie in the description in every episode based on the actual holdings in that episode. It does change as time goes on as I add and subtract things from this whole portfolio. I don't add too much at once normally, but you could take a look for yourself. If you like something in here, maybe you just want to take one portion of this portfolio and add it to yours, that's something you can do. M1 Finance is a free brokerage with a lot of super nice features that I like, and the user interface is fantastic, so definitely worth a look. And if you guys actually open up an account and fund it with about $1,000, I get a affiliate commission, which would be great, but obviously at least just check it out for me, since it is it's a nice platform, really tailored well for long-term investors, so definitely worth a look. But anyways, not much has changed in the last month. I've just been pouring money into this gold and silver slice, which has actually done quite well. And the reason I added this slice was to combat the confetti money that the Fed and really every central bank around the world has been printing. And that's what a lot of investors have been going towards is gold. So what's really driven a lot of the growth, though, is the gold mining stocks here. So you can see the junior gold miner and the, I guess you call it senior gold miners, more established, higher cap gold miners, which obviously make their money mining gold. And as the price of gold goes up in real dollar terms, or whatever money term it is, as people flood to gold, gold's price goes up. And when gold's price goes up, the commodity that these miners are mining goes up as well, so their profits would increase. So you would expect in a heavy gold rush, you'd have miners doing really well, and even just over a month, they have done quite well in this portfolio. So I'm going to keep adding that at least until this whole monetary, I'll call it a crisis, kind of ends, or at least slows down, because it's really just unprecedentedly massive across the world with all these central banks printing all of this money. I think it's a good hedge in a way against that. It's definitely a hedge against inflation, and hopefully it could perform well in the next year or two, or maybe longer, depending on how long this whole fiscal and monetary crisis goes on. But anyways, I really only have one other big update that I'll be doing with this portfolio is I'm actually going to be getting rid of this income ETF slice. It's 10% or a little under 10% now of the portfolio. It's really just a bunch of random ETFs and a few sort of funds that invest in a variety of things, but mainly bonds and other sort of inflation protected assets theoretically, but it's really just a lot of bonds. And honestly, I haven't done a ton of research into these funds. I kind of threw this thing together while I was experimenting with M1 Finance a couple months ago. It's happened to have done well because really you can kind of pick anything in the last 2 months and it's probably done well. So that's really the only reason it's here. And I thought, oh, I could supplement it with more dividends, and it has brought in some dividends, but I am a little nervous about this plummeting in the next month anyways, or in the next few months, and I really don't know everything that's in here, and I'd rather just dump it now and put it into something I'm more comfortable with in this portfolio, mainly the gold and silver slice, and I'll probably move some of it into Berkshire as well, or something like that, as I divvy up the 10% that would be out there. So that's probably going to be my update for next month. We'll see if I add any other stocks as well, but that's probably what I'm going to be doing in the very near future. But otherwise, that's really it for the portfolio. The big thing I wanted to talk about today is actually about the coming potential climate for business taxes, dividend taxes, and really just taxes that investors should definitely be aware of as we get closer and closer to election season, and as the House might stay in Democrat hands might flip back to Republicans. The Senate might flip to Democrats or stay in Republican hands. We'll see what happens there. But the presidency is certainly up for grabs. Vegas odds have Biden winning right now, which I guess makes sense given the crisis and how unpopular Trump has been for a lot of his term. We'll see what happens there. That's really not the point of this video. It's just to prepare you in the event that we do get a Biden victory. And a Biden victory would probably mean that the House is staying Democrat and the Senate might flip Democrat as well. So you'd assume if Biden wins, you're probably going to have a lot of Democratic policies being pushed through. And that could definitely change a lot of things, especially for investors. That's really what I wanted to talk about here. Now, specifically, he's made proposals over the past few months through his campaign, and it's definitely worth highlighting a few things, especially if you're interested in dividend investing or you are heavily invested in companies through something like the stock market, since there are a lot of big changes that he'd be doing. First off, under a Biden administration, they apparently would attempt to kind of eradicate all of the Tax Cuts and Jobs Act, which is one of Trump's signature acts that he was able to get through with Congress. And that had some sizable corporate tax cuts and really a lot of cuts for wealthier investors and just wealthier citizens in general. So they would repeal a lot of that and move the corporate income tax right back up to 28%, which is up from, I think it's about 21% right now. So that would be a large increase, getting right back to where it was a while back. Now, that by itself doesn't really tell you a lot, because businesses often have they have a lot of deductions to offset that corporate tax rate, since they're really only getting taxed on profits at that point. Now, when profits are taxed, you theoretically expect dividends to come down as well. So an increase in this income tax rate likely would slash dividends as well, since there's simply less profits to go around, assuming all else is equal. And that's a problem for business growth and a problem for investment returns, since you're not getting as much back, since the company has to get rid of over a quarter of its income as opposed to about a fifth of its income right now. So that is something to keep an eye on, but also, perhaps more importantly, especially for those investing in growth stocks and high valued tech stocks that really don't have a lot of actual profits yet, under a Biden administration, they'd want to impose a corporate minimum tax on book income. Now, what does that mean? So currently, like I was suggesting, most corporate taxes are really just on profits, since any income that a corporation makes can usually be offset by any expenses it incurred as a tax deduction. So really all that's left to tax, often is the case, is profits. Now, sometimes those profits can be whittled away as well, as Amazon has proven in the last year. They paid nothing in federal income taxes. Or in federal taxes, period. And it's because they had a lot of deductions, and they used the tax system to whittle down their tax bill. But this would impose a minimum tax on book income. So what that basically means is that a company like Amazon wouldn't be able to just erase their whole federal tax bill. They would still have some sort of minimum left over. So it tries to close that loophole, if you can call it, but then again, every tax loophole is there intentionally, pretty much, and theoretically, you have deductions that encourage businesses to take actions to maybe help grow their company, so rather than have to pay the tax man. That's kind of the whole idea, is that you have these deductions set up that allow businesses to spend in those particular areas, and then they won't have to pay taxes. So it encourages them to spend money growing their business. So this has growth implications. Every company is going to have some sort of minimum tax on their book income, which is basically their book profits before you get into all the tax deductions and that sort of thing, which is basically just income minus expenses. So income minus expenses, that would be tax. So your real profit would be taxed at some minimum before you add a bunch of extra deductions on top of it, which is significant for a company like Amazon and many others that might be using the tax system as it's designed to try and help grow their company while avoiding taxes, since any tax is taking money out of the business and out of shareholders' hands as well. Now, the other one is the increase in the capital gains and dividends tax. It says on income over $1 million. So it wouldn't affect most people, but for those of you who don't know, qualified dividends are actually taxed at the capital gains rate in the U.S., meaning that if you make less than, or if a dividend is considered a qualified dividend, which is almost all of them, you are only taxed at, here's the dividend tax bracket for 2019, and it looks basically the same now. If up to $500,000, or really up to about 434, you're only getting taxed at 15% or even 0% if you make less than 40 grand on dividends, on qualified dividends, that is. So you have a nice advantage here. But once you get to 20%, that's the cap. This would blow the roof off that and bring it up to 39.5%. And that's basically makes it ordinary income for people making over $1 million. So why do rich people invest in dividend taxes dividend stocks in the first place? And really, it's to avoid taxes. It's very tax efficient. You're only taxed at 20% if you make a boatload of money like this, or even less if you make less per year, which a lot do. Even if you have a high net worth, you might not have a super high liquid income. But regardless, it's only 20% right now. This would double it up to about 40%. So you'd lose that incentive that a lot of rich people have to go for dividends and those sorts of tax-efficient investing strategies, and they would probably look for something else, maybe something that has more depreciation, like a real estate type thing, or other investment strategies that are more tax safe, or frankly, they might just move it offshore into some tax haven, as many rich people do anyways. So you'd have a lot less demand, I would assume, towards dividend stocks in general from the super wealthy who own a ton of money and can really affect markets. So that is a big deal. And also, when you raise taxes in general, you have less reinvestment into stocks, into other things. So let's say a rich guy gets a bunch of dividends and he reinvests them all. Well, now he can't reinvest another 20% of those dividends and has to fork them over to the government. That's taken out of the stream of commerce. That's taken out of potentially that company's share price, since that investor isn't going to be reinvesting it back into the company. So that's a significant thing to consider. Now, it's not quite that simple, but it is something to pay attention to. Now, of course, this is not every tax policy that Joe Biden has proposed, or really that all Democrats have proposed. So if you want to see more about what Biden has proposed in his tax plan, I'll include a link to this article that I went over about all the tax policies, and you can take a look for yourself. It's a tax foundation that takes a look at the potential revenue that could be gained from those taxes and kind of gives you a quick little analysis for estimations. Obviously, things change all the time with taxes. It's much easier said than done to estimate them. But if you want to take a look at all of those policies, I'll include that link. But really, this video isn't a comment on whether Biden's policies are good or bad or necessary. Well, maybe they're necessary since the government's spending like mad right now. So you got two options, and that's taxes or inflation. The government has recently just been doing inflation by printing money to pay for all this spending. But the other option is taxes, and Biden's plan would cause tax hikes, which theoretically would pay for this big deficit that we have all the time. So it's your call whether you think Biden's policies are good, but either way, if you're investing, you should be aware of what's going on, since this will have significant effects on asset prices, most likely. I'm not a financial advisor. I'm just making a guess, and Biden also has to win to get here. So we'll see what happens, but pay attention to these sorts of things. Pay attention to the big policies that the Democratic Party and the Republican Party are pitching, since whichever one's in power would theoretically get their plan through, and at least the way politics have gone in the last 20 years, probably won't compromise to get there. So it'll probably be a pretty sizable change in either direction depending on who wins, and as long as the House and Senate aren't split again, you would definitely expect the whatever party's in power to actually get some significant changes through Congress and through the president's desk. So keep an eye out on this development. Maybe Biden will change his plan as it goes on, but I'll just assume he's not. We'll see what happens come November and leading up to November as we get through debates, however those are formatted in the quarantine era. But definitely just wanted to bring this to your attention if you weren't aware already, and so you can make better decisions as an informed investor when you're investing in the stock market or really in any sort of assets. Anyways, that's all I've got for today. If you like this video, be sure to give it a like since it helps the channel out a lot, and be sure to subscribe so you don't miss any updates, whether it be for this series, which I put a new episode out on the 15th of every month, or for my Greater Net Worth series, which includes this portfolio, but also all of my other investments. If you want to take a look at where my money is parked and kind of the context for any investment decisions I might be making, that is on the 1st of every month. So be sure to subscribe so you don't miss those. And of course, I release videos in between all of those episodes all of the time. But anyways, I hope to see you back here soon. And until next time, take care.